Welcome to our quarterly market review for the December quarter of 2024. It's been quite an unpredictable year in 2024 with geopolitical tensions in the Middle East and Ukraine, the US presidential elections, China's economic wobbles, and of course the market's infatuation with inflation data and what that means for interest rates. But all in all, markets have just gone higher and higher throughout the year, only to come off a little bit in the last few weeks of December. Let's start with Australia, and you can certainly see that the ASX 200 up 11.6% for the year, but you do see that little wobble in December. Now, the market's actually down 3.3% in December only. That wiped out the good returns that we had in October and November. So over the quarter, the ASX is down by minus 0.8%. Now, why has the market come off? Well, it could just be that markets go up and down throughout the year, and this was just a period where the market went down. Part of the reason, though, will have to do with the last meeting of the Reserve Bank of Australia, who decided to keep interest rates on hold for the ninth consecutive time at 4.35%. And coupled with this, a few days later, Australia's unemployment levels came in at a record low of 3.9%. That means inflation is going to stay relatively high, at least higher than what the RBA want for some time. So waiting for an interest rate cut to come to Australia is a bit like waiting for Godot. We might be standing around here for quite some time yet before we see this rate cut. Now, over in the US, it's a different story. They've had 3 rate cuts throughout the quarter. The first one happening towards the end of September, but then again, a rate cut in November and another rate cut in December. Coupled with that, Donald Trump won the US election, and he's seen as someone who's friendly to markets. In other words, his policies include deregulation as well as further tax cuts. So the market really was on a Santa rally, going higher and higher. At one point in early December, people were saying this is going to be a record high year of the S&P 500. But it all seemed to come to a crashing halt on December the 18th, when the Federal Reserve had their final meeting of the year, and the Santa rally turned into a Santa sell-off. Now, the Reserve did cut interest rates again by 0.25%, which was widely expected, but what the market didn't like was the statement afterwards that said, we're not expecting as many rate cuts in 2025 as you might think. On top of that, the market did sort of review Donald Trump's policies and thought, these tariffs that he's imposing on China, and in fact every other country in the world, are inflationary. And that again is going to keep interest rates higher and keep rate cuts further down the track. So the market doesn't like that. In particular, the bond market really didn't like it, and yields crept higher and higher. Now, the S&P 500, just in the period between Christmas and New Year, fell by over 2.5%, and the Nasdaq fell by about 3.5%. Overall, though, the US market, it's still got a positive 2.6% for the quarter, but it's got a sensational 25% return for the year. Now, with the Fed saying that future rate cuts will take longer and be smaller than the market was expecting, the US dollar rose to its highest level in 2 years. And you can really see this when you compare the US to the rest of the world in US dollar terms. The MSCI World ex-US Index down minus 7.4% for the quarter and returning just over 5% for the year. But keep in mind, that is all due to the strong US dollar. And you can see this when you look at how the Aussie has gone. The Aussie dollar down about 9.7% for the year. It started at 68 cents, finished just around 62 cents. But all of that happened in this last quarter. The weak domestic economy, concern over China's economy, and that strong US dollar all took their toll on the Aussie. So it's down to 10% in the last quarter. Now, when you look at how global markets went in Aussie dollar terms, it is a different picture. You can see in the chart here, Australia up 11.6%, the US absolute standout in Aussie dollar terms up 35%. But you can see that other markets around the world, Europe, Japan, and even the emerging markets have all got good returns in terms of AUD. So it's a bit of a tale of two markets here, with the US absolutely disconnecting from the rest of the world. But it's not the only place that that's happened. If you look at the Australian market, we know pretty good return of 11.6%, but down a little bit in the quarter. But you look at the two largest sectors in Australia, financials, our big banks, and the material sector, they're our big miners. You can see the dispersion between financials and materials is as large as it's ever been. The ASX materials sector down near minus 12% for the quarter and down over 13% for the full year, where on the other hand, the financials are up around 33% for the full year. So a tale of two markets there. Now, why is the materials sector doing so poorly? You can really put it down to iron ore. So here we're showing the path of iron ore, very similar to the path of Australia's materials sector. And why is iron ore down? Because Australia's largest buyer of iron ore is China, and they ain't buying it at the moment. Finally, let's have a quick look at commodities, where once again, it's a tale of two different markets. Gold is up 27% for the year. This is one of its best years ever. While oil, on the other hand, is down pretty flat for the year. Well, that's about it for our quarterly wrap. So what's the key takeout? It's been a fantastic year for equity markets, really throughout the world, with markets hitting highs in many countries, including Australia. But in the last few weeks, there's been a holiday slowdown as the market reassesses what might be the course of inflation and interest rates as we head into 2025. So a great year to be in markets. Thanks for watching. See you again next quarter.